So just for those of you, give everybody a flavor of what's going to happen here. I'm going to talk a little bit about palladium, the palladium market itself, and where we think why we like this commodity so much. After that, we're going to have 5 companies come up and present, and they're each going to give about a 10-minute presentation, or about an 8-minute presentation with maybe a minute for questions. So this is going to be relatively quick and rapid fire. The one thing I will tell you, and one thing I'll talk about this presentation, the palladium space is very small. There are very few companies, so you are going to hear from a lot of them here in a few minutes. So start off. You know, the title of the presentation, that palladium is running hot and has no signs of cooling down. Even the coronavirus hasn't really knocked it off. I was just checking my phone before I came up here, and palladium was only off $250, which is less than 1%. And I wish that the rest of my PA was only off 1%, the way things are going out there right now. So it is very much a straight ahead fundamental supply and demand story, and it's not something that is going to change in the near future. So, and that's the summary of my presentation, and I will get into the details. You don't have to look at this to know that palladium is hot. This has that perfect trajectory from lower left to upper right that you like to see at any commodity, and a lot of the stocks look that way too. Two things I'd like to point out in this slide. This is a supply-demand fund-driven move. We started talking about palladium last year, about 2 weeks before this. We launched a North American palladium, and then about 8 months later, it got taken out for just over $1 billion. And one of the largest platinum palladium miners in the world took them out, and the reason is they have a strong fundamental view as well. So how did we get here? I'll show the supply and demand chart in a second, and you'll see that we've been in deficit for a while, and the fundamentals of that is that basically palladium consumption has gone up. There has been a tightening of emission standards and remove emissions out of the tailpipe. Dieselgate certainly helped with that, and effectively what that's resulted in is an increase in loadings in each vehicle, and hence driving demand higher. However, palladium is a byproduct metal. And so primarily, no one's out there actually looking for a pure palladium deposit. And every company that we'll talk about, and we'll talk a little bit about this later, has other metals associated with. Either you're looking for nickel or you're looking for platinum. And so there hasn't been another, those discoveries in those sectors haven't led to more discoveries. The other thing is that automotive companies have spent, give or take, the last 30 years switching from platinum to palladium, because the price has always been historically the other way. Platinum's historically been double of palladium. And that 30 years has reduced their design flexibility in the vehicles, and switching back isn't as easy as you might think, and we'll talk about that later as well. And the second part is, there aren't any new projects. There is no metal out there. This, economic PGM deposits are rare, and hence why probably there's so few companies in the space. Low prices make them harder to find, and as I said, not just low prices in palladium prices that we've seen over the last few years, but low prices in platinum and low prices in nickel. South Africa is producing less. I got up really early on Thursday and listened to Impala Platinum's conference call, and I will tell you for certain, Impala has no intention of keeping its deep underground mines up and running. They are now profitable, but one of the analysts asked a question and said, hey, what's the price where you start to invest more capital back into your historic assets? And the answer pretty much was, we're putting flexibility in those assets, and basically that flexibility is so that they could shut them down when the price cycle turns the other way. They're using them now to generate that cash flow, but they are on the path to being shut down. And then normally where you get the big PGM ounces produced is out of nickel deposits, things like Norilsk Nickel or Voisey's Bay. And because nickel has been so out of favor for so long, people haven't been finding PGMs either. And so that's the breakdown. I think there's 3 charts across the bottom here, and I think a couple things I want to point out here. Most PGMs come from Russia and South Africa, and actually most PGMs, period, come from Norilsk Nickel, palladium. Demand is pretty well spread, and in fact, at 27%, and we'll talk about this in a second, China is actually on the smaller side for commodities that they're involved in. And then, obviously, 80+% of demand is autocatalyst. So most of the palladium that gets mined ends up in a catalytic converter and is on your car. So that's how we got hot. Why is it going to stay hot? The next chart is the supply-demand chart. It is expected to stay in deficit for a while. Remember that palladium is only a 10 to 11 million ounce market total, and it is in, give or take, a million ounce deficit for the next 3 years. And so 10% of the market is and there aren't million ounce palladium deposits kicking around out there. Palladium runs hotter than platinum, and that is not a comment on the commodity, that is a comment on how it fits into an internal combustion engine. That 30 years of designing for palladium has resulted in catalytic converters getting closer and closer to the engine. And as catalytic converters got closer and closer to the engine, the heat load on that catalytic converter increased. Palladium is much more efficient at high temperatures. It doesn't break down as much at high temperatures as platinum does. And this comes with the new emission standards. The emission standards have gotten so steep quickly, the solution for automotive makers has been to throw metal at it rather than improve design. And that's why these palladium loadings came. So if they want to go back to platinum, and let's assume for a second that that is an option for them. Remember, platinum is actually a smaller market, would very quickly be in deficit if there was a significant shift for autocatalysts. Our view is, and you know, one of the many things I did before being in financial analysis, I actually worked for I worked for an automotive parts maker. The life cycle on vehicles is 3 to 5 years. Material design changes, where finding a new place to hide a catalytic converter, is going to take 2+ years. Johnson Matthey, who are the world's largest catalytic converter maker, they put out a report. They put one out a couple weeks ago on the state of the market and where it is, and they are not seeing testing by the OEMs on platinum catalytic converters yet. That means that a real substitution is still 2+ years away. Where you may see substitution is actually in the other 17%. That's where you're going to get you'll get some substitution, as opposed to the 83% in catalytic converters. Again, when I show the next slide, you'll see that we've been in deficit for a while. So why has the price been running now? Well, it's a depletion of surface inventories. The physical palladium ETF, which does exist out there, if you're looking for just direct exposure to the metal, it's down to 660,000 ounces in the ETF, and that's actually a decline, and it's simply because people have been buying the ETF to redeem the metal. The second is that the other big metal source out there that was believed to be holding the price down was Norilsk Nickel's palladium inventories, and by all accounts, it looks like they're out. And even if they're not out, which I don't have a clear view on. Even if they're not out, they're obviously not impacting the market in any way. They're letting the price run. And this is the coronavirus point, and point 4. This is a commodity where China has the least impact. Any other base metal or industrial commodity in the world, China has a massive impact on it. With China only being about 25%, it doesn't have as big a deal. And this is actually because global emission standards around the world have been going up, and China's just starting to implement them. And so they aren't quite to where, say, the Europeans and North Americans are as far as emission standards. They're going there faster, so they will eventually be the dominant player in this metal. But they have less of an impact in the short term. Maybe that's why palladium's only down $250 today. So this is the long-promised supply and demand chart. This is what it looks like, and you can see the market has been effectively in deficit since 2012, and obviously with not a lot of new supply coming on. This is actually my favorite part of this chart. The 2020, what you can see here for 2020, 2021, and 2022, obviously significant plus million ounce deficits are forecast going ahead. This is my favorite part of this chart, which is analyst consensus. So this is about where the palladium price is right now. This is the analyst consensus for 2020, which is about 1,900. And it goes down to 1,500 for the year after. And if you go out to 2024, when the first new mine to come online will be Platinum Group, significant new mine will be Platinum Group Metals, who presented earlier today. And that's about a 300,000 ounce asset. That's out in 2024 when it starts to produce, but it'll be 2028 before it hits full stride. that asset, for 2024, the forecast price is about $1,400 an ounce palladium. And I'm not sure, unless they're expecting a massive global recession to suddenly people stop buying cars, that how that is going to happen right now. Because there isn't metal. And that's why this market has been so hot. It's why it has been on fire lately, and why it's going to continue to be on fire. So, I just told you why palladium's got hot, why I think it's going to stay hot. So what do you do about it? Where do you go and get exposure to palladium, other than buying the ETF? The investable universe is small, and I don't mean small in the sense of just there are a few companies. The actual companies are small. And our thought process and our philosophy here is don't buy everything, just most of it. Because you have a lot of early stage companies in here. Other than the sort of the big guys, your Sibonyes or your Impalas, you really don't have, once you get off that level, which is in that $5 to $10 billion market cap range, the next company down is Platinum Group Metals, who presented earlier today, and they're about $225 million market cap. After that, you get to Generation Mining, who are at 78. I would note this was priced a couple days ago, so these are probably a little bit high now, market cap-wise. 78 million. Then you get a nickel company next, which is Noront, and I'll show you how all these assets stack up. And then you get Valor, which is an asset in Brazil, and now you're below 30 million market cap for the balance. And part of the reason when we say don't buy everything, just most of it, is that you have a lot of very early stage companies. There's a lot of exploration opportunities there, good and bad opportunities, because you get the exploration upside potential, but also you take that exploration risk as well. And so our view is that you should be buying a basket of these, and not overweighting one or two in particular. And obviously, the other thing here, the triangles here are share price performance over the last little while. So you can see, obviously, big outperformance, relatively speaking, which you'd expect for this type of metal. And despite that, we're still in a small universe. So what do I look for in a palladium company? What do we look for in a palladium company? Like any hot metal, there will be hundreds of companies coming out of the woodwork. Maybe not hundreds, maybe 50. More than the 10 there are 8 that existed, 3-4 months ago, and maybe the 10 to 12 that are now out there. Things that we look for: good management, good allocators of capital. What you don't want is a company that was 5 years ago was a cobalt company, and then it was a lithium company, and then it had a vanadium run, and then maybe it was a cannabis shell at one point, and then now all of a sudden they're rolling out a palladium asset. That's not what you're looking for. You're looking for guys who have either done it before in the palladium industry or seasoned explorers and know how to put good money to work, and put money in the ground. Capital structure. This kind of goes back to that same idea of those historic shells that have been around for a while. Probably a lot of tired shareholders, maybe some cheap warrants. Watch out for those things. Those are the kind of things that in a rising market can all of a sudden stop good returns. You don't want to be covered by those things. Essentially have your stock price capped. So the third thing is assets miners want. This is one of our things with all our companies that we look at. Is this something that someone's going to buy? Especially, when we're talking about small, effectively 30 million down market cap companies. Is this an asset that is going to be big enough, have enough scale that people care about? Particularly, I like the nickel copper kickers that many of these assets have, simply because that nickel copper kicker is what is going to get it bought in the cycle, and it opens up the group of people who could actually buy it. If we have a nickel run, all of a sudden it gets exposure that way. Again, if you're very pure platinum palladium, you're going to get you'll get knocked off. There's a very small group of buyers who actually mine platinum palladium assets. If you have that little bit of a base metal exposure, all of a sudden the group of buyers gets a little bit bigger. Fourth, and more importantly, as these PGM companies get rolled out of the woodwork, more than just a theory. Preferably a resource, at least some good drill holes with PGMs in them, and maybe good surface samples, but definitely more than just a theory. Not a closeology play, not a we're next to Lactazil, we're the next thing to get bought. That is not a solution, and we're still at a stage in the development of the actual underlying companies that there are assets out there to be had that are more than just a theory. And then the last point is leverage. Does this thing actually have significant palladium exposure? There's lots of PGM deposits out there that have platinum in them. There's lots of them that are truly base metal deposits that have a little bit of palladium. And so that is a key thing for us. So we've taken that same universe, we've taken and stuck up here on this chart. And so we're trying to find a way to graphically show what these miners look like. So on the vertical axis is the percentage of palladium, and this is by metal value in the resource. Across the bottom is enterprise value per palladium equivalent ounce, and then the bubble size is the resource in tons. And so, like a lot of deposits, your large, low-grade things tend to have lower value. A couple things stand out here as being very odd. Your platinum group metals fits right against a couple things that's on the verge of being permitted and likely to go into production. At a feasibility stage is right up against a couple things that are a lot smaller. There's a couple things that stand out as being sort of outliers on this. And the one thing I would note is Grid Metals representing later. They do have a resource. That's actually not their PGM asset. So it looks like it's a little bit further down. So that's what we look for. That's what the space looks like. Lastly, what's next? So next, here you're going to get about a 10-slide, 8-minute presentation from 5 companies. So, we've sort of instructed the guys to give the highlights of the company. Obviously, not talk about the palladium market because I just finished doing that. And we will see what that, and you'll get a flavor for what they are. You're probably not going to get the whole story, and so if you have questions, all of them will be available in the, when we're having drinks later. You can corner them and ask them about their specific asset and why they like it and how it fits those 5 criteria that we talked about earlier.